Business today. I am here at the World Economic Forum at Davos, and with me today are three guests, including Sanjeev Krishan, the Chairperson of PwC in India. We are also joined by Deepak Jain, the CEO and MD of Jubilant Ingrevia, and Gopal Agarwal, the CEO of Anupam Rasayan. The subject of this conversation is very interesting. PricewaterhouseCoopers does a global survey of CEOs, which tries to capture the mood, the sentiments, and the business plans of business leaders. Thousands of CEOs, including what is called the India edition, and that India edition, the 29th one, is being unveiled here today by Business Today and PricewaterhouseCoopers, and with two CEOs to take us through their response to what these findings suggest. But to set up this conversation, I'm going to first go to Sanjeev and ask him to briefly capture the key highlights from this survey, and then we will discuss them with our other guests. Sanjeev, over to you.
Thank you for that, and welcome everyone. In terms of findings, I'll get to the findings. I think one of the things that you'll see when I talk about the findings is the resilience that India has shown right across 2025. That comes through, and the focus on doing things more Indian, if I may, I think that's also coming through. So let me quickly take you through the findings. Interestingly, 45%, and that's a very distinctly lower number than previous years, of Indian CEOs seem to be, very sanguine about global growth. In fact, 77% of Indian CEOs believe that largely India will grow, but the global growth is going to be muted. And I think that's a bit of a departure from what we have seen in previous years. So there is clearly a focus on India, and I think you can see a bunch of reforms that happened in India, and the fact that India was resilient is actually coming through in the survey responses that we got this year. I think the other thing which is coming through when we look at the responses from the global CEOs is that India today ranks very favorably from an investment destination standpoint. In fact, India is a joint second with Germany and UK as an investment destination when the global CEOs have been polled. US, of course, remains the top destination from that standpoint. I dare say that while Germany and UK have always been in developed markets, have always been key contenders, the growth in India has been almost double. So the global CEOs who are saying that India is net positive has actually doubled over last 1 year, and I think that's something that we should acknowledge. Again, I'll attribute it to the reform journey that we have had. I think the third one, clearly, there's a lot of work to be done, and that is acknowledged by the survey as well. When it comes to things like AI, I think the adoption of Indian CEOs has been a bit slow, has been a bit muted. There is certain anxiety that they have. 66% of them exhibited some amount of anxiety as to how they can create outcomes on AI. If you look at it globally, only 12% of global CEOs are saying that they actually got revenue and profit outcomes from AI. So it's an evolving space, and it's pretty young. But the Indian CEOs clearly seem a little bit more anxious about what it would mean for them, both from a demand generation standpoint and from a process standpoint in the years ahead. And let me just quickly talk about two more topics, and then we can come back. I think the first one really is when we look at trust, and I think that is a big thing because there has been this huge discussion 2 years back. Siddharth, we were sitting here and we were talking about sustainability and so on and so forth. I think how we can be more trustworthy and create more responsible organizations is coming through in many of the conversations, and a lot of Indian CEOs have felt that delivering the change at the pace at which the disruptions are coming to them will require embedding trust in everything that they do, including sustainability. So it is not gone out of the window. I mean, one of the questions that gets asked is that, is sustainability out of the window? It is not, but it certainly requires significant amount of trust building in the face of significant disruptions that are coming through. And I think the final one, as we see the India opportunity is clearly alive and kicking, but there are certain areas where clearly there is more work to be done. And two, which I will just reflect on, maybe we'll get the panelists as well, is one, enhancement of productivity, and the fact that we need to scale businesses and opportunities, not just do some sandbox experiments. So those are the five.
I'll come to you. And on the point of which is the single most important feature or factoid that you noticed from what Sanjeev told us? Is it AI or is it the fact that Indian CEOs remain overall more bullish than their global counterparts? What would be the single highlight that you would want to speak about?
Thank you, Siddharth, and thank you, Sanjeev. I think, first of all, I agree with all the 5 trends. If I just put my business and myself into today's context, whatever the survey has found resonates. In terms of the couple of stats that Sanjeev quoted, I think what surprised me a little bit is 77% Indian CEOs saying India growing more in a single year. And I see a little bit of dichotomy there. And I think, let me just express at least my views on why that is happening. See, if you take a mid to long term view, of course, India is shining. The kind of fundamental macro factors that we have in India that no other country probably can match in terms of future growth, the opportunity which is coming, the labor arbitrage which will make manufacturing grow, the way digital stack has shaped up over the last few years, the way infrastructure has been created. All of that augurs very well for the next 5, 10, 15, 20 years. In fact, until 2 years back, when I was in Davos 2 years back, we were all saying that this is a decade, this is a century, this is whatever of India. While that long-term trend still stays, I think what is happening is in the short term, there's a lot of uncertainty. And that uncertainty is coming because of what is happening geopolitically. The trade war, of course, the deals which unfortunately got delayed, and that is creating a lot of doubt in everyone's mind. And if you top it up with what is happening in Europe right now, with the growth, the overcapacity in China, and US going in a different direction, that creates even more uncertainty in the minds of people. So if you put all of these two together, so on one side, all of us, I think, are very bullish about next 5, 10, 15 years because there's no other way things will pan out. But at the same time, in the short term, there's a lot of concern, there's a lot of volatility. And hence that 77%, if I take next 5, 10 years view, Sanjeev, I think it makes sense. But if I take 2026, 27, till the time there is a little bit more clarity on what is happening, the way FIIs are taking money out of the country, all of that creates some challenges and risks.
Challenges and risks. Gopal, come in on weigh in on this point, particularly the ability. I think that is very important. That despite everything that goes around the world, the refrain from an Indian CEO would be "Jo kuch ho raha hai hone do. Let's focus and on our work, put our head down." That is what really resilience is. Do you kind of agree with that?
Say it's like we are preaching to a convert. As far as I am concerned, I am one of those kind of optimistic guy. And see, the way I look at it, businesses would have their own cycle. There could be in short term, some of us probably, and as Deepak also spoke about and Sanjeev, there is a bit of uncertainty given the geopolitical situation, some of this tariff and all that. But if I talk about let's say more for us or our company. We recently announced acquisition in US. We are acquiring a company in state of US. The point I would like to draw there is, see, there is a decent amount of growth. Now the question is that how are you looking to capture that growth? So the way we have looked at this acquisition of US is more of a forward integration for us. What we are looking to basically achieve through this is a classic model of offshoring and onshoring. So the way we would look at is that for us at the company, one could have been look at the traditional ways of growing where you look at doing the capex, you look at expanding your customer base and do it more in India. The other way to look at it is basically through this acquisition, wherein we said, can we basically look at a situation where we would do what India is best at in terms of, let's say, maybe doing the intermediary production in India, and then give. As far as a lot of what we call technological niche is concerned, things like semicon, defense, aerospace, some of these areas, and I mean the acquisition which we have done, this company basically specializes in those. Trust me, even to get, or let me kind of take a step back. We are a B2B company, where we supply to the name the MNC, in the world, and we'll be their, let's say, supply chain partner. I don't like to call myself a kind of a supplier to them, but more like a supply chain partner to them.
Yeah.
They basically are, the guys who are looking at how do they, really build partners in the supply chain. For my customer, it is very important that at the same time, he has enough and more of IP protection as well. Having a company, which has got registrations with them, and trust me, this registration can take anywhere between minimum of 5 to 7 years if everything is right for you. There are situations where, people have spent, maybe 8 to 10 years and nothing has come out of it. So from our perspective, the whole idea was fast forwarding this kind of a journey to go closer to my customer. And as I said, net what we would create is a win-win situation where there'll be enough business for us to do in India. Similarly, we'll look at, doing a decent bit of expansion, which my customers, would be looking to do in US, so that I'm able to, kind of supply them from US.
Sanjeev, this is a good example. While we always focus on headlines of inbound investment, there is outbound investment that also happens. And as we have seen, many very large cap Indian companies are investors, and we got another example. But the larger point, and I'm tying this to private capex, which has been a headline point for discussion for many years now. This finding that almost 57% of the responding CEOs in this survey say that they have entered one new sector in the recent past. How significant is this?
So I think that, that's coming across because of the shift in value pools, if I may call it so, because all the disruptions that are having, businesses have been thinking about their business model and saying, last year's survey, for instance, said 4 out of 10 CEOs, last year I'm talking about, they said that they expect that business to look very different in 10 years' time, right? Now, I think they have already started that journey, and that is why 57% of those CEOs are saying that they are actually entering into new areas. And 20%, just to supplement what you just said, 20% of the revenues are already coming from new sectors that they did not actually have, let's say, in the previous 3 to 4 years. So I think the reinvention which is happening is a response, is the adaptation and the agility that...
But did you get a sense and flavor of which are those new sectors? Are they tech-dominated? Are they focusing on, maybe customer services? Do you have a sense of that?
3 segments. One is IT. Certainly it is there. Second one is industrial manufacturing, and that is where the intention is to be part of global value chains. Indian businesses wanting to be part of global value chains. And the third one, not surprisingly, is aerospace and defense. So these are the 3 sectors where businesses are diversifying because they see value pools shifting and more value coming from these areas. And some of these, by the way, are capital intensive. And that is where you are seeing some green shoots of private investment to supplement the public investment that has been happening in India for the last many years.
Please come in on this. And I want to add your, let's just go beyond the immediate findings of the survey. Give us a sense of 5 years ago versus now. What has changed in terms of the confidence of Indian companies with respect to manufacturing? 20 years ago, people would say, manufacturing mein kya rakha hai? Let's focus on services, easier margins there. But what has changed?
Well, that's a very good question, Siddharth. And that is a topic which is very close to my heart as well, because I was a consultant before taking over this role, and I studied and I was leading manufacturing, and I studied it very closely. I remember in COVID times, when this whole China plus one trend started to emerge in a big way, I did one analysis, which I'll just quote very briefly. What it says is, see, we know China manufacturing is almost 10x of India manufacturing, whichever sector you pick up. The exports are like, they have $1.2 trillion of trade surplus even today, despite everything which has happened in the last couple of years with the trade war.
35% of overall global manufacturing.
And their exports have still grown, I think, at 10-12%, despite everything else in the last couple of years. Now, if the analysis that I did 5 years back, basically what it says is, whatever incremental growth which was supposed to go from manufacturing to China, even if 10% of that shifts to India, only 10% of incremental, because nobody is going to shut down plants and move capacity to India. But the incremental 10% and 10% of that moves to India, our manufacturing will double in 5 years.
So that's a very significant.
And we just need our fair share of incremental growth. If that 10% becomes 20%, we will be triple of our size in a few years. And that is what made a lot of us believe, and actually Gopal is a good friend and both of us have worked closely and both of us were service professionals. The reason we jumped into manufacturing was, and we have talked about it, so I'm speaking on his behalf as well, because there is such big and fundamental belief that manufacturing in this country has to take off now.
Jump in on this. You know, I want to relate a personal note that I started covering telecom way back in 1999-98. And once there was a question that was put to one of the biggest telecom people at that time that, what about manufacturing? Why are you just sort of focusing on services? And it was, the response, I remember it vividly, was that manufacturing mein kya rakha hai? It's services-led growth. The world India seems to have shifted with regard to manufacturing, and it's a mistake, correction that everybody in the stakeholder ecosystem is doing. The government has been trying, states are trying, industries are trying. Well, tell me about this. Is this a permanent shift, or is this just a knee-jerk response to a post-COVID supply chain realignment?
No, so maybe 2-3 things here. One, on a lighter note, even if you have to, you have tons of online guys, but what are they going to sell? You need to have something. So I'm saying even if you were to theoretically sell air, you'll have to still pack it and sell it. So you would still require manufacturing. So, I mean, as Deepak said, what we are happy about is that we are happy for tons of guys to focus on those and then leave the manufacturing to us. And, that probably would only mean that we can, probably scale and succeed faster than others. But yeah, that was on the lighter note. But again, just taking the point further, what Deepak talked about. See, classic example is China. The kind of growth which they have seen in last 20-25 years, and again, I don't want to repeat, that 5 to 10% incremental growth is something which would be more than us, sufficient for us to be, in the business and grow like 2 to 3 times in next 5 years. The challenge is that have we really invested enough and more? I think the thing which we need to look at, whether it is the corporate, whether it is the government or otherwise, are we really, doing manufacturing which is at some scale? See, I'm not talking about our ability to do at a scale which some of the other geographies have done it. It's practically impossible for us. But can we start doing some scale? And I can give you...
Let's get Sanjeev on that. Sanjeev, can India be near China, if not China, in terms of scale? I'm not bringing quality into it. It's just the quantum that I want your response on.
It will take time because I think both on scale and productivity we have kilometers to cover. Let me just put it, not just a few meters or whatever, right? I mean, we have a long way to go, unfortunately. I mean, our industrial productivity lags China's and almost half, right? I mean, on the industrial side, even on the services side, by the way, we are lower than China. See, partly it is also because automation. I mean, how much we are actually automating our industries at this point in time. And I think that's very important. And I will also say that, with AI now there, how do we use AI, from demand forecasting perspective, from preventive maintenance perspective, from figuring out what to produce, when to produce, etc. So these tools are available to us today. And
So Sanjeev, in an AI world, and it's clear that it's here to stay, it will continue to evolve in terms of its manifestation at a consumer level or at a company level. How does this manufacturing ambition as a nation go alongside the growth of AI according to you?
So I think 2 things. One is that in everything that we do, particularly on the manufacturing side, yes, scale is important. Yes, there has been a lot of subsidization which is there, particularly for some of these new areas like the global value chains, etc. But they will have to be supplemented. I mean, capital subsidies alone will never be helpful. Our logistics costs has come down, but it is still not comparable, right? Our power cost is comparable, labor cost is comparable. But unless we leverage technology on the shop floor and make sure that we are automating our shop floor, etc. I'm not saying that create dark factories and only for workers. I mean, we don't necessarily want to get that. But
political backlash to that?
And that's why I'm not saying that we need to create dark factories. But what I'm certainly saying is that we need to make our factories much more efficient. The productivity has to go up, both on the supply chain. Just look at clusters. Could we look at more industry clusters happening, right? Otherwise, the cost of production goes up. I mean, the raw material is somewhere else. It comes somewhere else. It's this far away from the port. Can we have more industrial clusters where we are then able to embed AI? The same AI, if it is embedded, where my customer is very, very far, my raw material source is very far, it's not going to give you the same outcomes. And that is the next set of policy intervention that is needed if we really want to scale our manufacturing to the question that you asked.
Okay. I want your responses as practitioners to this part of the discussion, and we'll spend 7, 8, 10 minutes before we wind up on that. And this is the implementation experience of any form of AI that you have done within your operations. Sanjeev, I think it would be good to sort of get a brief case study sense. 2 parts to that question. Where have you deployed the most within your overall workflows AI? And has it given you, and this is captured in the survey, any innovation benefits? Has it given you cost benefits? And do you think it has contributed meaningfully to your productivity? Starting with you, Deepak.
No, it has. That is the short answer, and let me just bring it to life. So, obviously, I'm also differentiating between AI and Gen AI and Agentic AI. So, AI has been there for a while, right? It has not come up in the last 3-4 years. At least, and by the way, as an ex-consultant, I'm a big believer in digital and technology and AI transforming businesses, because I have seen that. I have done it with several clients in the past life. But in our business, we started a program focused on just AI 3 years back. That program helped us tremendously, because what we did was we identified almost 200 interventions which we made at the shop floor level, and we have 50 plants across 5 sites in India, all chemical plants. And in the chemical business, the value creation happens by yield improvement. Yield is how much of raw material gets converted into the final product, the energy cost, and productivity, right? If you can manage these 3 things tightly, you can add significantly to your P&L at the bottom. And we implemented almost 200 plus interventions across our sites, and we have seen actually tremendous value that got created. To an extent, obviously it added to the P&L, and it is, we are a listed company and we have announced that as well. It is showing up in our P&L. We also got the recognition from World Economic Forum for the Global Lighthouse, and we are among the first few chemical companies globally, and last year we were the only one to get that recognition, because in some of our most commodity products also, a product which sells for less than $1 per kg, and which is hundreds of year old product, we could optimize the yield and energy cost, and that added to the value. Now, obviously the direct impact was on cost, but on the back of that competitiveness, I could sell more as well. So hence it had some impact on the revenue as well. So that is one part. The second part of it is innovation, where I think we are still in an early part of the journey. We have started to use Gen AI now to discover new routes of synthesis, what is called routes of synthesis in chemicals world, where let's say customer comes to me and says, produce this product for me, and I look for what are the different ways it can be synthesized, chemically or through reactions in the lab. In the past, a lot of work used to be done through literature search by the R&D team. They will tap into different global sources, and they will read all the literature, and they will come back, okay, here are the 3 ways. A lot of it now can be done through Gen AI. And we are seeing already almost 25% improvement in the productivity of or lead time of the R&D team on the back of that. And I think we have just about scratched the surface. The potential there is so much more.
25% and just about scratch the surface. Well, the same question to you.
Maybe I would just say 2 things. One, clearly, and this is again my bit of a suggestion, I would say to most of my CEO colleagues, is that don't leave AI to your IT department. I think that's one of the biggest mistake which most of us do. it is something which,
Sanjeev smiling there. Yeah, I'll come to you also on that.
so it is something, and again, to the point which Deepak made, see, some form of AI is something which has been in our activity, for long. So it's
Yes.
it's just that it's become a more of a buzzword, if I use, now. Taking, the example forward, I mean, Deepak spoke about manufacturing. One of the biggest help we are getting, is in the R&D. And, he spoke about, the ROS, the route of synthesis. See, for us to develop a new product, it's all about trying tons of permutation combination. And trust me, the guy sitting in R&D would do hundreds and hundreds of experiment, and, then would come with something, which would say that, okay, and again, just as a layman, if you mix A with B at so and so temperature, and this is the reaction. Now the thing is that there's so much work, or, at least for our company, let's say of 45 years, done by hundreds of scientists, which was sitting on piece of papers. All we did is basically converted all of that digital. Now anybody who's kind of let's say starting to do a work
And can
can pull it out, saying okay, what, at least it may not necessarily guide you what to do, but it will very clearly tell you that don't do 90 things, which people did. You don't need to repeat those. So trust me, I mean, as he said, whether one looks at a 25% improvement, or I would say 90% improvement in terms of what not to do, is something which is very clearly, being held by that. And, there is tons and tons of such knowledge, I'm sure, which is sitting with companies, which is sitting in their R&D department, which is sitting in laboratories. All we need to do is basically, the first step to AI is collation of a right set of data. It's, as we say, garbage in is garbage out.
Right.
To me, AI is nothing more than that. It's just that you need to be very clear what you want out of it. Are you collecting the right set of data, and then using it right?
Okay, let's try and bring that slide previously that was there. 56%, Sanjeev, of the respondents said that they are not yet seeing benefits from AI. I'm just kind of trying to juxtapose their comments against this. Is this just a sort of data methodology and related issue, or is it something that...
Sorry, before that exactly what I'm saying is that it's also about the CEOs driving where it's going to be used. Is it?
No, I think
Sorry.
that's a great statement.
Where it's going to be used.
To the IT
See,
department.
that is where the problem
Completely.
is. It's just
About the IT, I think, Siddharth, sorry, I'm just adding to what Gopal is saying. Unless we drive it from the top, right, it won't happen. Because what we need to understand is, because of everything else we talked about growth, any average leader in my organization is already 120% busy on something. Right? So you are imposing one more thing on top. Yeah. So we are the only ones, then we have to carry the mandate to drive AI as well.
Board should take note of that statement, but Sanjeev.
So, I'd like to add two things. I mean, first on that topic that you mentioned, and I'll, like when cloud adoption was happening, right? A lot of money was spent on cloud. And then eventually the CEOs were asking their CTOs, you've made me spend so much money on cloud. What are the outcomes of it? And I think to the point that Gopal mentioned, I think, one hopes that doesn't happen. And that only means that the CEOs have to be a lot more involved. Again, as Gopal and Deepak have said. I do want to talk about this thing about the role of the CEO, or, whoever is, I think when the world is disrupted, that's when real leadership comes in. Because let's be honest, many senior CXOs also will be loath at taking decisions because they are committing capital of the company, and they are taking technology decisions which could go wrong. And that's where somebody needs to, pat them, say that, okay, I have your back on some of these things. Whether you do it yourselves, or whether you encourage your teams and say that, okay, let's try it, and it's okay to fail. I mean, so not everything might work out. And I think that's where the role of CEO is also going to be very, very important on a go-forward basis, to build that confidence in the team, to build that trust in the team, and also to be the, almost, the one who is not just the external face of the firm, but also the one who is the internal evangelist, if I may.
Right. Okay. Concluding part of our conversation, and I want all three of you to look ahead, because if there's been one defining sort of headline for the past 4 years, 5 years, especially after COVID, that's been continuous disruption. And that continuous disruption aspect is captured in this survey. in great detail. But since I have all three of you here, I'll start with you on that aspect. Volatility, uncertainty, chaos, and constant change. Is that now fully sort of baked into your operating principle and approach that the world around me will continuously be in flux? I will just put my head down and do what I'm supposed to do.
No, I would kind of agree, and we got to put our head down and do what is right for the company. That's the only way to do it.
Since we are pretty much on the top of 2026, is there anything that you can sort of tell our audience related to this calendar that in 2026 you anticipate more of this and less of something else?
See, Siddharth, that's what I kind of initially started the discussion. See, businesses don't, you don't do business for next 6 months or 12 months. You got to plan at least something which is more mid-term to long-term. And I mean, I'll touch upon some of the, kind of aspect of survey and, what at least makes us believe, that, we will kind of keep going. One, we embarked on this journey of diversification. We were largely, let's say, agrochem heavy. We saw that this is not something which is going to, sustain for long term. We diversified into pharma, we diversified into what we call as high-end monomers, and that's really helping the cause. Today, a lot of our growth is coming out of that, number one. Second, from a geography perspective, we were more, let's say, India and Europe heavy. We diversified into Japan, we diversified into US. That's the second bit. Third bit I would talk about is that, yes, it is something which is your niche, which is going to keep you in the business. So we also, for example, let's say expanded in pharma. I mean, and maybe I'll take a minute to kind of explain my point. See, India is, let's say, has a decent kind of, let's say, share of the pharma world. But most of the players today, if you see, they are into API and formulations. The way we thought about our strategy is that, yeah, can we really go a step back? And we started doing what we call as KSM, key starting material. All we got to do is that as long as I can produce, I can sell. I mean, I practically have one person, managing close to 400 crores of my sale. Because all I need to do is produce right. If I'm able to produce right, there is enough and more demand. I don't need to even, look to sell it. So basically, all the effort is more on the production side. So, I mean, coming back, it's all about, one's ability to identify opportunity, taking a bit of a, I would say, calculated mid to long-term call, and walking that journey. I mean, trust me, we have had our share, and I'm sure Deepak will also again correlate. Chemical industry did went through, I would say, probably one of its worst period in 24-25. And when we announced this acquisition, somebody said, are you guys out of your mind? But again, I'm saying you don't do businesses, for short term. You need to think mid-term and long-term. And I think that's the kind of a way to kind of go about it. The last pitch I would add is two bit, which, and one of it, Sanjeev covered very kind of this thing. Innovation and sustainability. You got to keep these two aspects in mind. There is no way you can look at building long-term business if you are not constantly innovating, and it has to be something which is a sustainable solution.
So Deepak, long-term strategy and planning cannot be QSQT. It can't be quarter se quarter tak.
No, I think I can just echo what Gopal said, and I think I mentioned in the beginning, there's a dichotomy playing out right now in the world. The long-term fundamentals are favorable to India, and right, there's no question about it. And hence, everything he said, of course, in our own way we are doing, be it investing 600 crore of capex every year to create new plant capacity, we're not stopping that. Getting into new areas like cosmetics, nutrition chemicals, like the way they are getting into new areas, hiring the right talent in technology, R&D. Our R&D spend as a country is less than 0.5% of the GDP. In our company also, our R&D spend is less than 1%, but if I take the specialty part of the portfolio, we are already taking it to 2.5%, 3%, which is much needed. And some of our peer companies in our industry itself have already taken it to 2.5%, which is showing up in their performance also over the last decade, not just last couple of years, which has been challenging for everyone. So none of that is stopping. None of that is stopping, and I'm not saying that just for Jubilant Ingrevia or Anupam, because I keep speaking to Gopal as well. But I think if I look at the industry, everyone, we talk, right? When we meet in any forum, people are not stopping that. But at the same time, the QSQT pressure is always there, right? We are listed companies. We have to give certain level of confidence and comfort to our investors. And hence, every morning when I wake up at least, the first thing I checked is what has Trump said today and how it impacts my business and what do I need to do differently, because you have to manage those vagaries on a day-to-day basis because the business has to continue to run while you are also investing for the long term.
You wanted a quick interjection?
Two listed guys, you can't be asking this question because that's like touching the most sensitive now.
Sanjeev, the last word on today's discussion.
I'm glad that we have two people from the manufacturing sector, and because otherwise there's always a preponderance of services. But let me just say that disruption is not an alibi anymore, right? I mean, for anything that I'm supposed to do, or let's say my KPIs, disruption cannot be an alibi. And the second one I would say is that since we're talking about the CEO results, CEO surveys, etc., I do believe that there is a need for the top management, for the CEOs, to continually invest in the face of disruption. I mean, we haven't spoken about upskilling, which is, because one of the things that is really impairing the ability to scale and to actually enhance productivity is how do we skill our people, whether they're blue collar or white collar, both, right? So continue to invest. We spoke about innovation. I mean, continue to innovate, continue to do R&D, let few things fail, etc. In the face of disruption, don't pause what you are supposed to do. Don't pause investing, because that is going to keep the engines running and the fire burning, and that will keep India's ambition alive.
Absolutely. And this is perhaps one of the best ways to summarize a discussion as wide-ranging in scope as a CEO survey. Clearly the India chapter and the global mood. There are obviously going to be differences. I believe that by our genetics, by our birth, we as a nation and as a people are far more resilient. We are taught from a very young age to deal with constant disruption in our life. And that is why you see in the ranks of global corporations, many of them being led by people born and of Indian stock. But as far as manufacturing is concerned, my biggest takeaway from this discussion today with our very fine panel is the fact that as far as manufacturing is concerned, there is a lot of confidence. Many elements need to move in sync for us to become a true manufacturing powerhouse, but there is definite scope. A 10% incremental figure was mentioned. That 10 could become 30%, who knows, if all things fall in place and a bit of divine providence and luck also comes into play.
I'll just make one last comment just on that. I think all of you will relate to it, and I fundamentally believe in that. If you just look back into the history, every 2 decades a new manufacturing global power has emerged, from US to Europe, Europe to US to Japan to Korea to China in 90s to 2010. If you think about the next 2 decades, how many countries can you think about which can become the manufacturing superpower?
That needle will only point towards that very beautiful outline on the global map, which is India. I thank my entire panel for their time with us here today. It's been lovely discussing these findings. We'll be back with more as part of our continuing coverage from Davos, Brainstorm 2026, as we call it. For now, bye-bye. I'll see you again. Thank you very much.